and welcome to the League of Women Voters of Hays County Public Forum on Payday and Auto Title Loans. I know our sign outside says San Marcos Area League of Women Voters, and that's what we have been for 25, 30 years. But this year we changed our name officially to the League of Women Voters of Hays County. Can everyone hear me okay? Barely? Okay, how about this? Better? Okay. We changed it to Hays County because we have a very active unit in Wimberley, and we hope someday, well, in fact, there's the Wimberley crew right there, and we hope someday to have a unit in Buda and Kyle and Dripping Springs so that we can serve all of Hays County. So we're very happy to have the Wimberley unit here as part of our league. I'm Jeannie Lewis. I'm the coordinator for tonight's meeting, and I want to thank Bobby Carmichael and Diane Losnick for our refreshments. How about that theme over there? And feel free to get up during the evening if you want to go and still we have plenty of food, so feel free to get up and go refill yourself, okay? I also want to call attention to Margaret Lindsay over at the membership table. Stop by and visit with her and find out how to join the league if you're not a league member. I know there's a lot of league members here tonight, but some of you aren't, and so you might be interested in joining and helping us out. Ida Miller, sitting here, and Carol Belver are both have been working on the PowerPoint presentation, and we really appreciate that. This is PowerPoint presentation prepared by the State League, but just in order to get it to the projector and the computer showing, that's what they've been working on, so we really appreciate that. And as you came in, you were probably greeted by our league president, Peggy Towns, who is sitting somewhere. There she is, back in the back. So I think I've introduced pretty cool. Eric Bonner is here from Corridor News, and he is video recording. And if any of you need a recording, especially if you're with media, or if you're with a group that wants to show the recording to a group, let us know and we'll see if we can get that to you. Okay? I hope all of you will come back here not next Monday, 2 weeks from today on October 12th. Same day, same night, not same night, Monday, October 12th, 7 o'clock for the candidates' city council debate. So, and then the Wimberley League is having their city council debate, not their city council, but, well, it is city council and it's Wood Creek and school board on the very next night, October 13th. Is that right? That's what I thought. So be sure to come to that candidates debate. It's very interesting. The one that's here, there's a lot of competition. And also that night we will cover the 7 constitutional amendments that are on the Texas Constitution and the 2 city propositions that will be on the November ballot. So, and my voters' guides that us, but we'll also try to cover them in the debate too. The League of Women Voters of Texas is the organization that started this payday loan and auto title loan study. And Kayleen will explain more about that to you. But we do have a facts and issues guide that the State League prepared. It's a 10-page guide, has a lot more detailed information than we will be covering tonight. So if you're interested in even more information, you can pick one of those up as you leave. They're on the table. Okay, now for the topic for tonight. Our moderator is a longtime league member and a local attorney who retired recently from being general counsel to the Texas Department of Banking, Kayleen Ray, and I'll turn it over to Kayleen now. Do you want to hold this, Kayleen, or okay, Kayleen.
Thank you, Jean. Okay. How about this? Is that better?
I can go and ask him to turn it up if you want me to.
It's up to the audience if they need to be
just
louder.
a little. Yeah,
Turn it up?
yeah, just a little. Thank you.
So, good evening and welcome to our panel discussion. Forgive me, I'm going to read a lot tonight, so I'll be looking down, but I think that's better because I don't think I need to do this off the top of my head, so I want to make sure I get things right. Our local League of Women Voters is best known for its voter services, and namely that's its voters' guides and candidates' debates that Jeannie was talking about just a while ago. But the study of governmental issues is also one of the basic functions of the League. Such studies are undertaken at all three levels of the League, that being the national, the state, and the local leagues. These studies lead to both education and advocacy, two of the basic missions of the organization. The League's process for study and position development has acquired a solid reputation for its in-depth and unbiased exploration of an issue. After extensive study, a consensus process is used to arrive at the League's position on an issue. Tonight's forum, as I told you earlier, is part of this process for a state league study of payday and title lending in Texas. And I'd like to take just a moment to thank Jeannie Lewis for all her work on this. She pretty much single-handedly made this forum happen. So thank you, Jeannie. She has developed extensive study materials on the subject that we will be using for our local consensus process. These materials include, and I think Jeannie mentioned this too, the facts and issues summary document, which is based on a 120-page study report, which I did not print out when I discovered it was 120 pages, but it's very in-depth and detailed. Just like, you know, when the League does something, they do it. And so if there's anything you want to know about payday lending and the background for this study, that 120-page report will have that in there. Before we begin our panel discussion, though, I'd like to show you the short PowerPoint presentation that was put together by the State League. It provides an overview of payday and auto title lending in Texas, and this background is very helpful to understand the issues because they can be quite complex. All right, without further ado, we will see about if we can do this. I'm going to be, the text to this is also prepared by the State League, and so I'm going to be reading what they have prepared for this. The League of Women Voters of Texas undertook this study because payday and auto title loans are presently the subject of intense scrutiny at all levels of government and widely discussed in the media, making this a compelling public policy issue. While much of the media information has presented the issue from only the opposition point of view, there are legitimate points of view in favor of small dollar loans. State law defines a payday loan as a deferred presentment transaction in which a cash advance is made in exchange for a personal check or authorization to debit a bank account, and the check will not be cashed or the debit will not be made until a designated future date. An auto title loan is one in which an unencumbered motor vehicle is given as security for a loan. So what are the loans used for? Interviews with a national sample of 450 borrowers revealed that they used small dollar loans to overcome financial shortfalls whenever money was tight for basic living expenses, unexpected or emergency events, and special occasions. Why use payday or auto title loans? The borrowers chose payday and auto title loans because these loans were easy to apply for and qualify for, accessible at any time, available nearby, and lenders seemed friendly in comparison to banks or other mainstream loan officers. Borrowers believed a payday and title loan to be the best alternative to the disruption and financial penalties for bounced checks or shut-off utilities, and were overwhelmingly satisfied with their loan experience, primarily because of the convenience of obtaining the loan. Who are the lenders for these loans? 2/3 of the companies licensed in Texas in 2014 operated only one store and were independently owned. From their viewpoint, payday and auto title lenders do not take advantage of the poor, minorities, mentally ill, elderly, or military personnel. Instead, storefronts are located where they will attract the most customers, provide them with convenient locations in areas where a large proportion of the residents have low credit scores. No direct association has been found between location and minority neighborhoods, although low-income areas have higher proportions of minority households. Several interest groups and faith-based organizations have sounded an alarm about drawbacks to payday and auto title lending, seeking to educate the public and lobbying for increased regulation. Opponents argue that payday and auto title lenders take advantage of cash-strapped customers needing a short-term loan and trap borrowers into long-term cycle of debt, and that high-cost, small-dollar loans exploit the poor for financial gain and are immoral and unethical. In August of 2014, the Texas Office of Consumer Credit Commissioner reported that 207 companies were licensed as credit access businesses in Texas, operating 3,300 storefronts in over 2,200 cities and towns. Regarding the demand for payday and auto title loans in Texas, the Texas Office of Consumer Credit Commissioner reported that 1.7 million borrowers in Texas took out over 2.7 million new payday and auto title loans in 2015, totaling $1.6 billion in consumer credit for new loans. According to survey data from the FDIC, a higher percentage of Texas households used payday and auto title loans in 2013 than the nation as a whole. Payday and auto title loans cost more in Texas than many other states, primarily because Texas has no limit on fees that may be charged. Regarding the size of payday and auto title loans in Texas, 62% of small dollar loans in Texas in 2014 were $500 or less, and 88% were $1,000 or less. The average auto title loan was 4 times that of the average payday loan. That's $2,000 versus about $500. How affordable are payday and auto title loans for low-income working families? In 2014, 63% of jobs in the Dallas-Fort Worth, Arlington metropolitan statistical area paid less than the $16 hourly wage needed for a single-parent, one-child family to pay for the basic household necessities while living in the metro area. As a consequence, a small dollar loan may be needed to cover an unexpected expense. But paying off the loan without additional income may lead to refinancing the loan one or more times or eventually to default. Texas law sets the maximum rate of interest at 10% per year. In 2001, the Texas legislature amended the consumer loans section of the Finance Code, restricting fees on payday loans by size and duration of the loan. In 2011, the legislature amended the Credit Services Organization section of the Finance Code, authorizing payday and auto title loan establishments to operate as credit access businesses, prohibiting a limit on fees charged by credit access businesses for their services, and requiring specific disclosure requirements at the business site, on the internet, and in writing to borrowers. Thus, while there are specific limits to fees for payday loans under the consumer loan law, the provisions of this law are not enforced because the Credit Services Organization section of the Finance Code prohibits limiting fees. The figures in the table on the screen show that if the consumer loan limits on cash advances were enforced, the cost for a payday loan or auto title loan would be half of what it is now. You might want to look at that for a minute. I had to study it to see the differences there, mostly in the acquisition fee amounts. Texas cities are prohibited from setting interest rates and cannot override state or federal laws. For this reason, 35 cities in Texas have regulated payday and auto title loans through business and or land use ordinances as of May of 2015. Most of the local business ordinances resemble a model developed by the Texas Municipal League. The ordinances limit the amount of the loan by the borrower's income or value of the vehicle and restrict the number of installment payments and loan renewals. Of the 8 legal challenges to local ordinances in Texas, all have been dismissed. Do payday and auto title loans help or harm their borrowers? Research findings are mixed, reaching opposing conclusions. For every study showing an adverse effect, there is one showing an increase in household welfare. While the studies represent meticulous, valuable research, all of the studies today have design flaws that reduce the believability of their results and limit confidence in their conclusions. Thus, given no definitive evidence, the issue must be decided in the public policy domain. Many policy points can be considered, but the main questions to be answered are: to what degree should payday and auto title lending be regulated in Texas? And how can the small dollar loan market be regulated so that lenders function both as a consumer service and a successful business? The role of the League of Women Voters is to provide balanced, factual information about payday and auto title lending and opportunities for people to come together to discuss this issue. A 10-page summary of our study is published as a Facts and Issues brief. It is available free on the website at the top of the screen. Notice there. And print copies at $2 each can be requested by contacting the State League office by email or telephone that are also listed at the top of the screen there. The Facts and Issues has the content or the synopsis of the study results just presented to you and reviews major policy options, related issues, and different approaches to reform. We have a distinguished panel tonight who are going to lend us their expertise on payday and title lending. Jane Hughson. Ms. Hughson is a member of the San Marcos City Council and a longtime League member. She brings us information and expertise regarding local regulation of lenders. Next to her, Dr. Chaddick. Dr. Chaddick is currently the pastor of the First Baptist Church in San Marcos. He worked for nearly 7 years in San Antonio as an advocate for reforming the payday and auto title lending industries, representing the faith community on panels and testifying before Texas legislative committees on the moral dimensions of lending and its effect on borrowers. And next to him at the end is Yannis Banks. Mr. Banks has served as the legislative liaison for the Texas NAACP since 2007 and has worked with a coalition of groups called the Texas Fair Lending Alliance to seek to bring responsible payday lending reform. Our fourth panelist could not attend the discussion in person tonight due to a previous commitment, but he agreed to provide written responses to our panel questions. Travis Kilpatrick Mr. Kilpatrick is the owner and CEO of Cashbox Pawn Inc., which offers payday advance loans in addition to other services. Prior to opening Cashbox Pawn in 1999, he served as regional manager for Easy Pawn. He is a longtime resident of the San Marcos area, and he attended Southwest Texas State University. We felt it was important to the balance of this discussion to include Mr. Kilpatrick's perspective as a lender, even though he could not be here. So I will be reading his responses as we go through the questions with the other panelists. So, if we're ready. We'll begin with, what we've done is prepare a group of questions from the lead, and I'll be presenting those and then getting comments from each of the panelists that we have. And then following that, we'll have an opportunity for the audience to ask questions. As you go along and think of some questions, then you'll have an opportunity at the end. So our first question is, in your opinion, does payday and title lending provide a needed service to Texas borrowers? Why or why not? I'll read Mr. Kilpatrick's response to this first and then ask the other panel members to give us their opinion. Mr. Kilpatrick says, most payday loans are used to pay unexpected expenses or expenses that could not be postponed. If payday loan customers live from paycheck to paycheck with very little discretionary income, even small expenses may cause financial problems and make emergencies a frequent event. In such cases, even frequent use of payday loans may be better than the alternatives. Deprivation of access to credit could cause substantial economic and personal harm if it forces the consumer to go without the means to meet necessary expenses, such as medical care, car repairs, living expenses, rent, or work-related expenses such as transportation or appropriate work clothing. So turning to our panelists that are here, Mr. Banks, would you begin with your thoughts on that question?
Always good to be first, I guess. So it's debatable, I guess. Right? Do they provide a needed service to Texas borrowers? Can y'all hear me? Is that better? There is always a need for people to have access to credit or money in times of emergencies, which is why a lot of people have credit cards or even take bank loans. So there is a need for folks needing access to emergency funds. However, that access to or being able to get that emergency fund should not put you in the bind where you're now financially strapped or you're setting yourself up for failure. I think if they provide a service out there for the people, to the community, it should be something that's a win-win for everybody, where they can loan the money and get money back, and they can make a profit, and the people who borrow the money are able to responsibly have the money and be put in a position where they can pay the money back. And I think y'all saw some of the data that was shown that shows that the majority of the people who get these loans, they fail in paying, or by their definition of paying back, they fail in paying back the loan by their definition, even though they may flip the loan, as I say, multiple times, where they may make that payment on that principal or make a payment on the fees 10, 11, 12 times. You have a $500 loan, they paid 10, 11, 12 times, none of that money goes to knock down the loan. Then by their definition, you fail to pay the loan back. So you're not paying them back the money, but by that aspect, you've paid back the loan, and they're probably 3 times the amount of what it was. So are you really going to get paid back? So I would say folks need access to getting more money, but it needs to be a responsible money. So I wouldn't say that this is the model that they need to have. It should be something responsible and set up for them to be successful in doing to paying it back. Hopefully that answers the question with that. Seems like I'm trying to size it.
Dr. Chaddick?
Yeah, I largely agree with Mr. Banks' position. I think there is a need for small dollar lending. People have a need for that access to small dollar cash. But the way the industry is currently structured and the way it's currently unregulated right now, I can say that I support the payday and auto title industry as it stands. And let me share a story that kind of illustrates that, both sides of that. And it's really a story about how I got into advocating about payday lending. I was in San Antonio as a pastor, and we had a family that came in needed some help, and they were in danger of losing their house. And so we sat them down and began to help them make a family budget, and work through those kinds of things. And the one who was helping them work through it called me and said that they can't do it. So we mean they can't do it. I said, well, since they would be able to do it, except they've got this loan thing out there. He said, tell me about the loan. I said, well, they took out a $700 loan 4 months ago. And so they were paying on it for 4 months. How bad could it be? Well, I asked, well, how much do they still owe on the loan? He said, $700. And I said, well, how much are they paying on that loan there? He says, well, it's structured that they pay $200 every 2 weeks on the loan. It's an automatic draft out of his bank. And so I added that up, and at the time, it hadn't quite 4 months, so they had paid about $1,400 on a $700 loan, and they still owed $700 on it. And to me, I just thought that couldn't be legal. And so that was when I began making calls to some of the folks in Austin and saying, oh, have you ever heard of anything like this? And they began to explain to me about the legality of the unregulated market. So that was a case of a family who obviously needed access to small dollar lending. But the way the lending was unregulated, the way it was structured, it really trapped them in this cycle of debt, so much so that though they were able to make their by the end of that 4 months, not only they were at risk of losing their home again, but they were also now in debt to the third-party lender. And so it simply magnified the cost for them and trapped them. So for that reason, I say yes to small dollar lending, but no to auto title lending as it's established right now.
First, the disclaimer, and that is that anything I say tonight is my opinion only. It is not representing the City of San Marcos City Council or staff in any way, because the city doesn't have any regulation on this. And to my knowledge, we've not contemplated any, at least not recently. So anything that I have learned since being asked to be on this panel is going to be my opinion and not the city's stance on this. I would agree with the other gentleman on the panel is that it looks like some small loan every now and then people need, but the way that I've learned that they work, such as the one you just explained, I don't see how that can be sustainable for anybody at any time. And I'm always amazed at the ads and commercials on television can make it sound like it's so much fun to borrow that money. I just look at those and just kind of shake my head and go, oh no, this is bad.
All right. Second question. Are the current regulations of payday title lending in Texas appropriate and adequate? I think all of you have kind of addressed a little bit of that, but a little more in detail about what you think about the current regulations is what this question is kind of trying to elicit. Let's see, start. Well, I'm going to switch it up here every time we have a question. Mr. Chaddick.
Well, as I alluded to earlier, I don't think the regulations are sufficient to govern the industry. And, the illustration I often use with regard to this is that we have tried unregulated lending before in the nation on a much larger scale with the home mortgage loans and subprime lending, and we all know how well that worked out. This probably, because it is small dollar lending, will not ever create quite the bubble and the financial crisis nationwide, but it is nevertheless harmful to the borrowers. So I think regulation in this case is a good thing for the consumer.
Let me read what Mr. Kilpatrick answered to this. The payday advance short-term credit industry is licensed and regulated in Texas, where laws generally govern the terms of the transaction and require certain consumer protections. State regulators ensure that lenders are following the laws and regulations that govern the payday advance service through rigorous monitoring and enforcement activity. Although the state provides the primary regulatory framework under which payday advances are offered, certain federal regulations and laws apply to our business and protect consumers. Federally, lenders must comply with disclosures required by the Truth in Lending Act and are subject to other laws that generally prohibit misleading advertising, protect against discriminatory lending practices, and proscribe unfair credit practices. The Federal Trade Commission has oversought authority for compliance with federal laws by payday lenders. Like most members of the financial services industry, the payday advance industry will be regulated by the Consumer Financial Protection Bureau, as well as the Office of Consumer Credit. I feel these regulations are appropriate and adequate. Excuse me?
Now, there are some in Texas that say we don't need regulation on much of anything. But I think this is one where we do, and because we don't have it at the state level, as noted in the PowerPoint, a number of cities have come in with what can be regulated, and I will cover some of those as we go through the other questions.
Mr. Banks, your views on that?
So,
You work in the legislature,
Yeah.
right, with a lot of legislators. So.
I get to deal with those wonderful people every 2 years. There's some great people there, and some people are there. And then that's how, government works, right? But, this is a state that hates, I guess, regulations. We've seen what happened in West Texas when the plant exploded. Folks are like, well, we need to have more regulations with the plant to see the inspections of where you're keeping your fertilizer and stuff. And folks, they're like, no, regulations, that's bad. Government coming in, that's bad. We're good. We just want some money to try to fix this place and we'll be fine. This is a state that's like anti-regulation. But I think some regulation that has, he said, it's good in Mississippi. We have the different cities, the 35 cities that have their, I guess you try to call that regulation of what they set up. And those are fine. We could live with a state model based off of that. That would be great. That would be fine. That would be acceptable. But as it stands now, there's not really a state model. And, they can do as they please where they are. And it's great for those cities. And there's a mixture of cities, large and small. You have a lot of people, though, who are unprotected. And if you are, as you know, many large cities, or even if you look at where Austin is regulated, people who come right down to Kyle, San Marcos, and get that loan and not have any problems. So that's where you get the issue of, there not being any regulation. And, there is some, as he mentioned in his letter, there's some stuff they have to deal with where the lender interest is capped at 10%, their fees is unlimited. And that's where they can get you the fees that they put into these loans. Where these fees can get, a ridiculous amount, a large amount that you're paying in fees. And that's why you will see them come and quote unquote, what they call refinances, where they talk about how they come back and they just pay on, the fee to take the loan out, basically. Which is why you can take a $700 loan and make payments for 4 months and still owe $700 because you're paying the fees. There's no cap on the fees. So they can get around that even when you create regulations, whether it's federal law or state law. They always find a way around that or try to find a new product and maybe try to name it something different and say, well, that's that. This is this, and it's completely different. And so we can do it this way. I think you look at what was done, they're talking about federal laws. Yes, there's the law that's trying to help the military. But we've seen in places like Fort Hood, Killeen, military town, San Antonio, they try to figure out ways around the federal law. So a lot of times you see people say, well, it takes an act of Congress to get something done. Well, even when you have an act of Congress, they find a way around an act of Congress. And you wonder if it's going to take an act of God to get this, to get people to follow the law. Because as of right now, when you create the law or you have something in place, they figure out ways around that. And that's how they get to the CSO niche. Is when, Texas had kind of, I guess they would say outlawed them. They found a loophole in the law and say, well, since this is what you regulate, we'll just call ourselves something completely different, these CSOs. And, it's kind of unregulated. We can operate in this manner. And we're good. And so, they figured out a way around it. So, we do need regulations. It's not adequate right now. And I can get more into that if you want to, but I think he's covered quite a bit with just saying, with the illustrations he talked about how they're paying, how loans are. They can range from 200 to 5% APR. And that's where you have no problems. You have a $500 loan, and the average refinance cost is $1,100 more, which you pay in a period of just a few months. So you're paying a lot of money. And these families are struggling. It's not just, we have to realize it's not just that this covers a broad range of people. We're here in this college town. I went to school at Texas State. And you can see, and even when I lived in Austin, you look at Houston Tillotson right across the street from the university, there's a bunch of these places. that is not just folks who are responsible or adults who are getting caught up in these. We have our college students, our kids who are in college. We know how much college tuition costs now and how it keeps going up. Senator Corona, former Senator Corona, who used to be in the legislature, he told us a story about his son. And Senator Corona is a wealthy man, very wealthy man, and his son got caught up in payday. So it's not just, it just goes to show. And his son, he told us a story how his son took the loan out because he was in school and wanted to pay for, I think, a vacation, it was spring break or something. It was, he got the money. I wasn't putting out anything he needed. And he wanted to be an adult, wanted to be grown, and trying to pay the loan back himself. Well, after a few times of trying to pay the loan back, he realized he couldn't pay the loan back, so he had to go to his dad for help. And not everybody's in that situation where they can go to a family member for help. We need to make sure that folks are not caught up, not just folks who are adults, who are college kids as well, to make sure that when they leave school, they're going to be in debt enough from tuition that they are set up to try to be successful once they're done school.
Perhaps explain those who are not really aware of this, why sometimes it is difficult to pay the loan back. Many of the loans are structured in such a way that you cannot make partial repayment of the loan. And so if you take a $700 loan, that amount in full, plus the interest and fees, is due at the end of 2 weeks. If you cannot pay, $700, that would be $65 on top of that. So you'd be paying $765 at the end of 2 weeks. If you do not have the cash to pay the $765 at the end of 2 weeks, then you're given the option of rolling over the loan or reinitiating the loan. This is also one of the reasons we have a hard time finding real numbers in regard to the industry itself. Some count those as new loans, some count those as rollover loans. So it's hard to know exactly what numbers we're playing with in terms of numbers of loans made in Texas. But that's why payback becomes so difficult, is there's no partial payment. Unless they fall into the regulations of these city ordinances requiring that perhaps 25% of every rollover that goes to pay down the principal rolled over 4 times if done. But in the case of the family I was talking about, they could have rolled that over forever because they would never have $765 at the end of any 2-week period. They just lived too close. But they could come up with $200, which is what was necessary to roll it over. And the company did this, which is why they automatically drafted out of his bank on the 1st and the 15th of the month $200. So it was set up for him to pay. And so that's why Senator Cronin's son got caught up in that. It wasn't that he didn't have the money or wouldn't be able to come up with the money given time. It was that at 2-week periods, he did not have the amount of money to pay back the loan, and so he got caught.
Well, it sounds like the 3 of you at least think that the current regulations are not appropriate and adequate. So what regulations do you believe appropriately balance the protection of and access to credit for the borrower with the business interest of the payday and title lenders? Excuse me, want to start that one?
Sure. Cities can be very clever whenever there is not a state law on something, and if the law doesn't prohibit it, that gives you that window of where cities can do things. And as just mentioned, I'm going to read from the city of Bryan some of the things that they put in their ordinance. And one of them is that, and they call them credit access businesses, the cash advance for a consumer or assist a consumer in obtaining in the form of a deferred present transaction may not exceed 20% of the consumer's grossly loaned income. If we're talking about a motor vehicle title loan, may not exceed the lesser of 3% of the consumer's gross annual income or 70% the retail of the motor vehicle. And also, installments may not be payable in more than 4 installments. Proceeds from each installment must be used to repay at least 25% of the principal amount. But there's other ways. Think of those in San Marcos that you've seen and where they're located. Okay? What the city of Bryan also did was, they changed which commercial zoning categories they can be located in. But they also have a structure containing a credit access business shall be located at least 1,000 feet from another structure containing another credit access business. And this will be important to those of you who know how the bar ordinances run, as measured in a straight line between the nearest points of one structure to the other structure. A lot containing a credit access business shall be located at least 200 feet from any lot zoned or used for residential purposes. Again, straight line. A lot containing a credit access business shall not be located on property fronting a street classified as a major arterial or greater. No credit access business shall be permitted on a lot wholly or partially located within, and they list several of their business districts, so you can't be located there. And here's the one, think about where you've seen these businesses. The credit access business shall be situated only within a freestanding structure and shall not be co-located in the same structure as other uses. So that's how they are limiting how many in reality and where they can be located. And I think it's a good idea.
What I'd like to do is read Mr. Kilpatrick's response to this. He says, it really boils down to two main regulations. How much can one borrow and how much can a lender charge? That gets very complicated because payday loans are intended to be based on your income only. As a consumer, if you need a certain amount of money to borrow from your paycheck, how would you feel if the government tells you that you are not allowed to get that amount? As a working adult, if you need cash now and are willing to pay a fee for that cash, as the lender, you are agreeing to give a payday advance loan in cash on a small denomination, uncollateralized, unsecured, short-term financial transaction based on the borrower's steady income. The key is there is no collateral except a personal check. Although the interest rate is high, so is my default rate. I have written off approximately 25% of my income from bad, non-collectible loans. So for every $100 I make, I lose 25. My point is, the interest is high because the risk is high. So, to you gentlemen, what do you feel about what regulations are adequate and reasonable?
I'll go first. We'll arm wrestle over here. If you don't mind us. I believe the facts and issues that has been made available. I mentioned that the default rate nationwide on Payday Auto Title Loans is really in line with the default rate of other loans that were made. It's not significantly higher because of the borrowers. It's around 11% actually nationwide. And so I'm not sure that we have, the numbers bear that out, that there is a significantly higher default rate on those who are trying to repay. Although it may also depend on how you define defaulting on the loan. As Mr. Banks said earlier, is defaulting on the loan, or you consider defaulting on a loan when you're asked to roll the loan over. Is that considered a default, or is it truly a default when you simply stop payment and that goes to a collection agency? And so I think there's some question about those numbers themselves. Ms. Hughson, I am also in line with those kind of city ordinances that help give some escape for the borrowers, so that when they are trapped into these, at least there is a way out. The idea of partial repayment being built in there. I do like Brian's zoning section. The Texas Municipal League has a sample ordinance on their website, and you're welcome to go to just Google the Texas Municipal League, and it will take you there. On a little sidebar, they will have a payday lending. You can click on that and read their sample ordinances and their other detailed information about that. That was basically the model in San Antonio, and it seemed to have been effective and provide some outlet for them. I think another avenue of regulation also needs to be collection practices. Some of this has already been passed, but I know that many are not necessarily following those regulations, or they don't seem to have much teeth. There were two collection practices in particular that were really egregious. They're somewhat related. One was the practice of, if you go in to make a loan, you were asked to write a check in the amount of the full measure of the principal that you have made, plus the interest and fees. And they settle that check and then not cash that, and you were not able to somehow make repayment. Generally, by the time they did cash that, you didn't have enough money in the bank to cover the check, so it was a hot check. at which point that becomes illegal, and so they threatened legal action on behalf of the hot check law. So there are some protections for the borrowers with regard to that, but there are some collectors as late as last year, as late as this year, February of this year, I had received a call from someone in San Antonio that on behalf of their neighbor who was getting phone calls threatening to take them to court based on that very issue. The other collection practices are again just the threatening collection practices. I know that it was Ace Cash Express at one time, one of their collection agencies listed themselves as Texas Attorney Collections. Attorney had nothing to do with what it was that they did, but if you looked at your caller ID, the collections can't come up because your screen wasn't big enough. So what you saw was Texas Attorney was calling you, asking you about your loan, and so there was the implied threat of legal action against you there. This is particularly egregious, I found, with regard to many of the families that we dealt with, senior adults in particular, who did not know resources necessarily to call on other avenues to help. And many of the folks who were simply uneducated about who to call and report this kind of thing to. We just normally got calls to the church for this. So some regulation with regard to that also I think is necessary.
Right. What are you advocating for? What's our regulation?
So I agree with both have to say. And she read off basically what is text in this their base model. Is what she read off, and I definitely agree with that. I would look to add a fee cap. That's something we were trying to get in every session. And the lobby for payday lenders, from the gentleman very session says that's a non-negotiable, non-starter. We're not going to ever talk about having a fee cap, and they have the vote support where that's not going to happen. But we look at it and say, well, it's one thing to regulate and cap the percentage of the loan. But if you're going to put a fee cap and try to control the fees they charge, then they can just continue to do unlimited fees and create new fees. Whatever they can think of to add to it. I know here in the state, we hate taxes, so they'll say, well, it's not taxes, a fee. And, we write all those fees and go on and add that. So, we want to see a fee cap, and we want to see access to data. Because a lot of times when we try to create law, to try to help regulate them, they will claim, well, this is, how he said it's going to affect me this way, or I have this, my default rate is X amount. I think it was 10% of what he does, he has to write off the default rate. Well, what is the default? Is it somebody who's paid 7 times on refinancing the loan 7 times, they've been making payments and finally can't do it, so you call it that a default, but you made so much money back off that already? Did they really default on it, or is it just that they finally couldn't pay it and they had to stop? But you made your money, so they didn't really default on the loan. So we want to have access to some data, so we can try to help shape a law, and since they say it's things we try to propose aren't feasible for them. Well, let's see some of the information and data you have, so we can try to work with that. And then they will claim proprietary, law, saying, well, you can't see this because it's going to hurt my business if I disclose this information. So it's kind of, your head hit the wall. What can I do? What can we do? We're trying to work with you, but we can't get the information we need to try to, give you what you want. So this is what we're going to ask for. And this is where we draw the line. It's not really a fair negotiation. We would look to say, once again, access data, fee cap. There's a lot of the approaches to reform in the plan is what we're asking for, what we would look at, and doing it, and just trying to restructure how some of these loans are done to say that, yes, how once again, 25% of it goes to the principal. We want to just try to make it fair for everybody. And I think that's the one thing we tell them we want everybody to be successful. We want them to make money if they're going to be invested, but we also want to set the limit up to be successful and pay back and get what they need. And everybody walks away feeling somewhat good about the transaction and the process. I had a story from a lady from Colleen that called, and she had her car repossessed, or she did the auto title loan, and was having trouble paying the loan, and they reached out to her and said, well, either you set up these payments or we'll come take the car. She said, well, I can make some payments like this. Let's do this. And she sent the check, and she was making payments, but they decided since she was already in trouble once before, they was going to just take the car because they wanted the car. And she called me and told me they took the car. I said, well, you got to get your lawyer. That's what I can do. You got to get your lawyer and go to court, because that's against the law. They can't just cut away workers. I said, did you have a contract at the time saying that if you do this, you're going to be fine? She said, yeah, I have a signed contract, written contract saying, is that going to take my car as long as I make these payments? So she took him to court, and she got her car back, which is great, but this goes to show that, if you don't know or they feel like if they want it, they'll take it, and they just do how they want to act. And we need to make sure that the consumers are protected in this transaction.
My next question is one that some of you have kind of already addressed, but let me go ahead and point out what this question is about. Do you support upholding the legality of local city ordinances, some of the things that Ms. Hughson was pointing out that some cities have enacted, that regulate payday title lending, or should the state legislature prohibit local jurisdictions from enacting such ordinances? Let me read first what Mr. Kilpatrick said. I have never liked the government, whether local, state, or national, telling a person what they can or cannot do. I don't mind the regulating part. That's fine with me. That way we all conduct business in the same way. But no, if it is any legal business, they should be able to operate. If the business is successful and supported by the citizens, then why not? I don't like tattoo parlors, but apparently many people do. So if they pay their employees and taxes, so be it. Let's start with that one. And it's, do you support upholding the legality of local city ordinances that address
The
this?
simple answer is yes. They've been affected in 35 cities that they've been in. More cities are looking towards doing some shape or form of the ordinances. And we use the ordinances for the base bill that we wanted to at least get passed that was based off the city ordinances. And we feel that anything less than what the cities have passed as a statewide law is ineffective law. If the cities have said this is like the bare minimum of what we want, and if anything, that's something the state could do and say, okay, we hear from y'all 35 cities. And once again, it's not just your large cities, your Houston, Dallas, Austin, and San Antonio, what have you, El Paso. It's a mixture of large and rural cities, so it's in towns. So we see that this is across the state issue. And as he stated, if regulation happens, it's across the board, everybody plays the same playing field. That's what the state should do. And you hear it from the cities. This is what we want. We want to be able to protect our people, and since you're not doing it, we're going to do it. And so, I think until the state gets their act together and pass something, because part of the role of government is to protect the citizens. That's part of the chief role and function of government, right? We learned that in Government 101 on your first government class. Your job is to make sure your citizens are protected, and this is a protection that they need. So, yes, I do support upholding the legality of local city ordinances. And if need be, I think more cities should enact them. If the state doesn't want to do their part, once again, they have a very strong lobby for the state not to do their part. Then I think after a while, the reps, the senators, and the governor, the lieutenant governor will have to start seeing what's going on in the cities and listen to the cities, and the cities saying, well, if you don't want to do your job, we'll do it for you. The same as Texas like to tell DC, since you don't want to do your job, we'll do it for you. I think the cities are saying the same thing. They should be upheld as they have been upheld for all the lawsuits and findings.
Dr. Chaddick, I think you said that you did support city ordinances of this sort.
Right, I agree. I believe city ordinances, the legality of them ought to be upheld. But again, only because the state is not providing effective protections and perhaps even better national protections. The Consumer Financial Protection Bureau is studying this, and they keep making noises that they're going to hand down some regulation at some point. At some point had been last February, and it was March, and then it was April, and here we are almost in October, and we haven't seen it yet. So, not holding out as much hope as I did in February. But until that point, I think the state, all that's really left of us is the city ordinances.
Ms. Hughson, you're on city council. What do you think about this?
And Jane's opinion is, yes, I do, but we do need to remember that there's a lot of area in the county that's not being incorporated into a city. And so, are we driving them right out of town, which is possible. But yes, I agree that we should uphold the legality of the city ordinances. And the other half of that question, should the state legislature prohibit local jurisdictions from enacting such ordinances? Jane would say no.
All right, our next question. Should payday and auto title lenders be required to assess the borrower's ability to repay a loan? If so, Does an affordability threshold work? For example, a requirement that loan payment should not exceed 5% of a borrower's periodic income. So this is a type of regulation that this question is addressing. And I think some of you have mentioned this particular type of regulation. So I'll just open it up to you. What do you think about it?
I think with the limited data that we have so far, that yes, this is a fairly effective protection. How well it has been to be regulated, I'm not sure. There was the whole idea of being able to assess the borrower's means. There was some question about that. I know in Austin in 2013, we heard testimony about one of the fees that's associated with these loans is the fee to do a credit check on those who come in. And so they're assessed $25 or so to do a credit check on the people who come in. But we also heard testimony that those credit checks were never actually done because most of those who are coming into these places already have poor credit, and so there's really no need to check their credit. You know they have poor credit. And so that was simply a fee that was charged but never actually enacted. And so, I worry about the ability to really assess the borrower's true ability to repay on this. If it were able to be given meaningful regulation with meaningful teeth behind that, I think that yes, it would be helpful and it would solve some of the other problems, perhaps with regard to being able to take out multiple payday loans. I don't know any stories I've heard of people who have been paying on perhaps as many as 3 to 5 loans as they're trying to pay one loan with another loan. They go down the street and get another loan, pay for that loan, and so it becomes a mess real quick. But they're able to do that because no one's actually checking to see if they have any loans outstanding.
Yeah, once again, I agree. I think that they should be able to access the borrower's ability to repay a loan. Because once again, it's about making sure that they're set up to succeed. We don't want them to get caught up in a loan which they can't pay back and they end up worse off than they were beforehand. And we saw the data about why people take out those loans. It's no difference of expense that's come up that might have been known that they can't afford to pay this month. And that goes to also working with the community and having maybe private partnerships set up with having other means of access to money or credit for these people. We know a lot of folks have gone to the churches. A lot of the church's charity money they give out to help folks, they're going to pay back payday loans. So that when they normally will go back and pay the bill, the light bill, utility bill, buy some groceries, is now going to finance payday loans. And so I think we need to look at to see, or they shouldn't have to check to see if they're able to pay these loans back, and will they be able to be successful? Because we want both parties to be successful if they want to get this loan and they need this money. We want something to be feasible for the lender. As they say, they take a great risk with doing these loans and what have you. But we also want people who are taking the loan to not only be able to access it and have their credit, their ability to pay it back access, but even look at too if somebody who needs the help with building their credit. We can look at helping them build their credit this way to try to, yes, they are reliable people. They can pay their bills back, pay their money back if they take. They do borrow if they're set up for success in that with the situation. As you talk about the subprime home lending and what have you, where they're set up to fail, we want to make sure that they are set up to be successful. So we think that accessing or assessing to see if they're going to pay back a loan at a certain amount should be done. I think nobody would want somebody who can't afford to pay $1,000 home back if they only afford $200 to come out and get that loan, and then they're in that debt trap. They can't get out. They never had, they were never set up to be successful. And sometimes the government do have to look out instead of look out for people who may not be as informed how the loan works. Because you see a lot of people who take these loans and they don't understand that once you pay that first pay, that the money you're paying into it doesn't knock down the principal. There's a lot of people who get these loans thinking that I get the loan, I put something on that. Eventually, I'm gonna knock this loan down, right? And I realize, you're not knocking it down. You're just refinancing until you pay the whole thing off. So we need to make sure folks are looked at.
Comments on that regulation?
Yes, but sometimes it might be difficult to determine what that is. If you've got folks that are working as carpenters, stonemasons, etc., and they're taking the work that they can get, they may not have the same amount of work every week. So it may be hard to determine what that affordability threshold is. And I heard a story a number of years ago for all the payday loans, but this was somebody who's going to go buy some furniture and finance it at the furniture place, not in San Marcos. And what this person was told was that they said, the salesman said, well, do you ever have any overtime? And he said, yeah. And he said, bring me the pay stub with the most overtime, because they were going to qualify him for more of that loan based on that one pay stub with all the overtime. He didn't make that in a week. So there's ways around it. I think it would be good, but I think that we're going to run into some difficulties if we try to do that.
From a lender's perspective, Mr. Kilpatrick says this: well, it only makes sense that the customer has the ability. We loan less on our payday advances than the national chain stores. We do have a formula, and it is based on their income and the ability to pay back the loan. If you give someone more than what they can pay back, you are hurting everyone, especially your business. As far as the threshold goes, with all due respect, 5% of their check will come close to meeting their needs. Again, you are telling a grown person what they can and cannot do with their own money. If a loved one dies and you need $600 to get the funeral, the state should not be able to tell you how much you can get by law. These are emergency loans where a person has nowhere to turn. Misconceptions about customers who use short-term payday advances are common, including the erroneous belief that they are unbanked. In fact, 100% of payday loan customers have a bank or credit union account. According to an analysis of consumers who use payday loans, the typical consumer has a high school diploma or better, with 54% having some college or a degree, has a low and moderate income, is in an early family life cycle stage, and has children, little liquid assets, and uses other types of credit to meet unexpected expenses. What I'll do at this point is, I have 2 more questions I can ask, but I thought I'd open it up and see if anybody wants to ask another question that you have from the audience at this point.
My name's Ida Miller, and we've seen Texas limit local ordinances in Denton with fracking. Do you see some sort of threat to these local ordinances in payday loan lending?
Sure. Yeah, and I think we've heard some rumbling, this past session about possibly trying to tie the payday lending into the fracking. The same fracking ordinance and other ordinances that have been passed. Not just Denver payday loans, but other local ordinances. There was in Austin you couldn't have, you have just a ban on bags, right? You have to bring your own bag. There was thought to add that one into it as well. So there's been conversations, for better or worse, I guess, in the Capitol about adding the city ordinances into that, or into a separate bill, maybe, and outlawing those kind of ordinances. Thankfully, it didn't have much traction and gain much legs, and we're hoping it will stay that way, and that we can maybe get something from a payday lending bill out there that gives a regulation that there's no need for that. And of course, within the bill, there's always conversation about outlining the ordinances once the payday lending bill goes into place, that the state passes, and then that's, we've told before that, that's based off, we don't want to see anything less than what the cities have passed already. I couldn't agree to outlawing the city ordinance if you want to do less than what the city's already doing. I think you have to at least meet us at where the cities are. But again, there's been conversations about that. I can see that coming up again next session as well.
Nothing the legislature tries to do surprises me much anymore. And in this one also, there was actually, I believe it was a freshman legislator, filed a bill to take away the rights of home rule cities to make any ordinances. And that wasn't in reaction to the fracking and then it was reaction to something else that really surprised me. So nothing would surprise me, but I would hate to see it.
Oh, okay. I understand that you've done a good deal of research on these 35 cities that have made their own ordinances and so forth. How much consistency is there among these cities? Do they all have about the same sort of regulation, or?
I don't know.
Yeah, for the most part, they've been the same. 26 of the cities, which includes Dallas, Denton, Amarillo, Midland, and Houston, they've adopted a unified ordinance. So about 26 out of 35 have the same one, and then there's some differences in the rest of them. So, yeah, there's been, for the most part, some uniformity. There's been some tweaks and changes that every city has the right to do. You can give them a base model and say, well, this is what works, this is a good idea, but of course you should adapt it to your community. That may be different. So, for the most part, yeah, there's been some uniformity with the bills, which is why we feel that that base model is a very good one when you have, even the cities that do have some differences, they have a lot of the same stuff in there, just a couple of tweaks. So it's works that this is a good base to go from and work from there. So they've kind of stick together.
Thank you.
Mine's not a question. I've got an opinion that I'd appreciate the panel's comments on. I don't think we can get anywhere. Larry Calvert, I don't think we can get anywhere with state regulations when you see what the legislature does from one session to the next. And I'm sure Texas is not the only state that has legislative problems. And I also think that taking a national deal, we ought to look at not just payday loans, but the whole financial industry, because I don't think credit card companies are doing much better than payday loans. I appreciate your thoughts.
Anybody got thoughts on those comments?
Well, again, as I alluded to earlier, I think there is some hope for some national regulation, the Consumer Protection Financial Bureau. And we're hopeful that at least the rumors that we have heard coming out of that will be substantial regulation, and a regulation that those of us up here at the table anyway would be largely in favor of. I don't know how that touches on the larger banking issues, but it is perhaps important to point out that many of these credit access businesses that are operating under the umbrella of the Consumer Service Organization. They are third-party lenders, so they're not playing entirely with their own money. They are integrated by the larger banks, and so the larger banks have a vested interest in this, and that they are receiving some return. Now, the banks are under the banking regulations, and so the amount of interest they can charge is capped, and so they receive that cap on their interest. But to that end, third-party lenders are able to add their fees. So that just speaks to the lobby that stands behind the no regulation on this is far deeper perhaps than sometimes we expect.
Other comments?
Sure, and I think as with anything, I do a couple of radio shows, and I always tell people that any solution is twofold. It's going to take community and government. There's no one single solution. And the community would educate people and informing people about the loans, and even have some public-private partnerships may work. But we're going to need this regulation from the state, and here's why. Currently, how we are now, we have found that consistently Texas pay more when it comes to these payday loans because we are regulated. They pay more than borrowers in other states like Oklahoma, Florida, and Oregon. Oklahoma has them regulated, so people who live at the border just instead of having places in Oklahoma, they can come right to Texas and say, well, we got more in Texas. Y'all come here, we can make more money from us. These industries, where other states, they're fine being regulated in other states because they know Texas is unregulated. So they can make up money on the backs of Texans. And that should be a problem. And that should make people upset. When we look at state data, which has been collected since 2012, we also see that they continue to pay more compared to years past. 2012 and 2014, the dollar amount of new loans increased by 10%, but the dollar amount of fees collected increased by 23%. So they are making money on the backs of Texas, and we need to have regulation. We've seen what regulation can do in other states, and of course they will have to move around, and folks say, well, you're going to have some folks leave. Well, there's been an increase already because of the market competition, but we need to make sure that they're not making their money, and it's a very wealthy industry that's making a lot of money and as a whole nationally, and they're making a lot of that money on the backs of Texans here. And we should make sure that our citizens are not financing other states' payday loan operations as well. And that becomes an issue when you realize that we're financing their corporations or they're in their business in other states where they do have regulations and they haven't left the state. They just know we can make money back into Texas. So, we're good here. Because there's about 2,900 active licensed locations in Texas as of June of this year. So, there might be more of those than McDonald's in a lot of cities. McDonald's is everywhere.
Your name, please?
I'm Joanne Jernigan, and I would like to ask Dr. Chaddick, did you start any type of education program for the members of your church? Because I think that this is essential. If children aren't taught that these things are out there, of course, then they have to be taught how to live on $15 an hour, too.
No, that's an excellent question. And education is one of the key pieces. Financial literacy is one of the key pieces. I think it has to be partnered with regulatory action to really benefit borrowers. Two quick stories about that in my own church. One, the family I told you about, where the church was finally able to help them dig out from underneath that loan and keep their house. That by establishing some education about the household budget, providing a small measure of accountability in that, they were able to live within their means for over a year before life circumstances changed, and we had to kind of revisit that. Second story, this was just last summer, I think. I just popped in on our youth group on one Wednesday night, had about 25 high school and middle school students, and I simply asked the question, seeing them all there together, how many of you all have had a class that has taught you how to balance your checkbook, has taught you about credit, that kind of thing. I had one student out of the 25 that raised his hand. I had another student who said, my dad told me about that. And so we decided that we would do a 6-week study with them and invited their parents, and I was amazed at the number of parents that would actually show up with their young people, and that the young people would allow their parents to show up with them to a church event. And we had quite a lively discussion. You've never really been part of a panel until you've been grilled by a 7th grader on where tax dollars are going to go. So that was an exciting part. I had a few that asked about checks, but most of them do about checks. With debit cards and fees, it was big news to a lot of folks, including their parents.
That was one of the questions I was going to ask. The question I was going to ask next was, Texas Public Schools require a financial literacy course. What do you believe should be included in this course about the use of small dollar loans of this kind? I have an answer from Mr. Kilpatrick. I'd like to answer his view on education. I think it's very important for high school students to have a class of understanding how credit works. Credit is everything in this country. It can save you money on your house or a car payment by having lower interest on your loans. Use all credit wisely and don't live beyond your means. However, if you need a small loan, only borrow what you can pay off, or at least have a good plan in place. I am constantly coaching new customers on how to pay off or pay down the loan. Question here.
Ron Fortin. Is there any data from the 35 cities that have local ordinances as to the impact on both the consumers and the community of their ordinance?
That is a good question. I know San Antonio Express News published an article just recently. She may have a copy of it here and be able to reference it better than I, but that did show there was some indication that there was some contraction within the industry itself. I know there were some of the storefront properties were closed down because of the ordinance. There's some debate about that. Was it because of the ordinances? Was it just because of the economic situation in our country right now? How did that work? But there did seem to be some contraction within the industry itself.
In other words, did the ordinances do the citizens any good?
We would hope so. I don't know. I mean, there's still access to all of those, the ones that exist. So I mean, there's still easy access. We do know not all of the smaller municipalities around San Antonio, for instance, have ordinances, and so many of the places do funnel their clients to, like Balcones Heights, for instance. You can go to Balcones Heights and receive unregulated loans there. And for many people, that's only a 3 or 5 minute drive, just go to change towns. But you can go over there and get a different type of loan than you would at the block over in San Antonio. So the easy access is still there. I'm not sure if there's any larger data than that, but I have heard about the cities themselves.
Also, these ordinances have not been in place for that many years, so it may be too soon to tell. But also in San Antonio, it was a matter of when they're popping up on every corner, at some point, not all of them are going to survive even without any regulation. So I think in San Antonio, there's unsure about how much of it is just the market got saturated with them, how much was the ordinances. The good news is there's fewer of them.
And the fact that those who do take the paydays, the loans in the ordinance areas are allowed an out, and that the rollovers, the 25% going for the principal, that itself is a benefit to the consumer that take loan on that.
I guess any data we have, you can get from Texas Office of Consumer Credit Commissioner, the OCC. We don't have all. The state doesn't track default rates. So I don't know if that's going to show anything about the cities, but any information we have about the payday loans and what's going on, which is much, they will have it. OCCC will have that kind of information. But like you said, the ordinances are relatively new, and it's still hard to measure when you can go right next door or for some people right across the street, and you're in a whole different city and it's unregulated. So it's kind of hard to measure it out, which is why it's good to have a state regulation so everybody has to play with the same playing field.
Burning questions?
I'm Linda Calvert, and I would like to get some clarification on the comments that Dr. Chaddick made. What is this relationship between the large banks and this industry? How are the larger banks able to play in this industry? And are there other players that we should know more about?
Right. The best information, it's taken a long time to uncover some of these connections. The best material that I have seen on it is produced by the Public Accountability Initiative. You can find their wonderfully short, how many pages that is. It's only 24 pages. You can find that online, print out the PDF copy. They have an executive summary at the front with a wonderful little diagram detailing some of the major banks and their underwriting of some of the national players on the payday market. This doesn't touch on any of the local lenders, but groups like Cash Express, Cash America, which are the ones I recognize along here, Advance America, Cash Advance, First Cash, Easy Corp, all of those are referenced in this. Our article is actually titled Creditors. New York Times has also done some investigative reporting on that. Theirs came out over a year ago. It was last that I saw that named some names about some of the major banks that stood behind some of the national payday lending organizations. We have some any others than those.
Well, yeah, and one thing, once again, they go back to proprietary information, and they do a good job of trying to keep that information secret, whereas give out as little as possible as we've tried to find out that information. And if I remember correctly, I might be wrong. I think there's also some who try to do a public information request to try to see if they can get that information from them and try to get a rule from the AG's office to see if we can get access to that kind of information, because they do a great job of keeping that information secret and close to the vest. And that's Texas Appleseed has done a lot of work with that. That's the kind of information you kind of need when you want to try to draft a bill and new regulations. But you want to make sure that even the third-party folks have to play a role, who play a role in this, are intact as well. When you want to find that information out, they say, hey, hold on now. You can't find it. If you do that, you can put my secrets out there, and you're going to mess with my business, and we can't allow that. So it becomes, once again, your head hits wall, and say, come on, we're trying to do something good.
One more question.
This one I really don't particularly expect an answer to, although if you have it, I'd love to hear it. Thank you all. You've shed a lot of light on this subject for all of us. I'm sorry? Okay. Thank you all for shedding a lot of light on this subject. And I'm probably don't expect you'll have an answer to this question, but can any of you tell me of a good story about someone who's taken out a payday loan? You know, we've heard some bad ones, horrible examples, but is there a happy ending story ever anywhere?
By the time they get to me, it's no longer a good news story, generally, so I don't have one.
I don't have a good story. I will say this based on Texas data, between 10% and 20% of people who take out that single payment loan, which is what he described when it's meant where you take it one time, pay it off, you're good, but people come back 7, 8, 9 times of refinancing. So between 10 and 20% of those transactions are paid in full within a calendar year without any refinances. So it's very rare when you have somebody who falls into a good story. You will hear some good alleged when we go to testify. People will pop up, and I'm sure the payday lender would have somebody who says, "I have a customer who thinks it's great." Well, there's always going to be somebody who thinks it works, and it may have worked for them. But the fact of the matter is, they're the small minority. Between 10 and 20% of people who do these loans do it one time and can pay it back. That's almost between 80 and 90% of those who fail. So there you go.
Fun anecdotal story. In 2013, one of the state payday lender groups sent a text message out to all of their consumers asking them to contact then Representative Mike Villarreal's office and ask or communicate to him that they liked the payday product. And that effort actually backfired because most of those who actually called in to Representative Villarreal's office told them that they wished they had never taken out a loan like that, or there was some confusion and they thought that perhaps Mike Villarreal was trying to collect from them. I would have liked to have been in the office as they were receiving those phone calls. That was Representative Villarreal's experience with good stories.
Is he the one that has the payday lending business?
No, ma'am.
There is one of the...
It is. He's out of Houston. He's also the one who's set in charge of watching over the regulatory action over these matters. Is that someone different?
There is a representative.
Yeah.
I don't get it wrong. I think it's Gary Elkins. It's who I think it is. Who's in the Texas House? He's a payday lender, which is one of the other reasons we have this problem bills to move forward and getting to the House floor. And even the former Senate chairperson of the committee that did payday lending, when she lost her re-election, she became a lobbyist for one of the payday lenders. I think her neighbor, told me, was one of the CEOs of one of the payday lending businesses. So there's a lot of political ties. They have a lot of money to spend. We have people and voices, and what we use, we don't have the money to spend that the lobby groups have for payday lenders, so we try to just hit them with the heartstrings and tell the story. And this is why it needs to be done. So, but yeah, I think it might have been 2 reps who had payday lending company. I know it's definitely one. They even payday lending company has a payday lending company, so that makes it a little harder when you're trying to get a bill passed. They're there, running interference.
Well, may I say one more thing? Remember our moderator at the beginning when she was doing the introduction, she called attention to the study of 450 borrowers across the United States. That was done by the Pew Charitable Trust, the Pew Research firm, very well known, and they were overwhelmingly satisfied. And so this is where we're getting the research is mixed and not necessarily dependable, I guess.
Conflicting information. This makes it a very difficult issue.
But people in the commercials seem to be having a great time.
Well, before we close, I'd like to give the panel an opportunity. Is there anything that we haven't asked you about that you'd like to say to tell us about Payday Auto Title?
One thing that we did not touch on that I have found important in the years that I have been involved in this, the Department of Defense, and this is in the Facts and Issues as well, the Department of Defense did label the payday and auto title industry as, I believe, as a threat to national security at some point years ago, and capped interest rates and fees to active duty military and their families at 36%, and labeled that as protection. In the years that I have at least been in Austin, Yannis was talking about that on the national level, this has not been true, but at least in the years that I've been in Boston, I have not heard anyone speak against those protections for our military service people. And my argument has always been that if we saw fit to extend protections to a certain segment of our society, albeit out of patriotic duty, surely we could extend those same protections to all of the citizens in the state of Texas and cap interest rates at 36%. But judging by the lack of legislation that has come out of Boston, that argument has been unpersuasive.
You actually mentioned we work our NAACP and Texas Appleseeds and a bunch of other groups, AARP, and there's many others. We were part of the Texas Fair Lending Alliance. So if you hear anybody with any issues or stories that they've had with payday lending, especially the bad ones, if you hear good ones, that's fine too. But if they are currently having problems, they can contact us. The website for Texas Fair Lending is texasfairlending.org. Or if you go to TX NAACP, you can contact me that way. We can try to get them some information or some help or try to steer them in the right direction. But yeah, it just has to be leading to the next session. Once again, we will go with more stories, and hopefully we'll get people who come into office who see this as a problem. I hear from people, whether some of y'all, the league, whether it's decide to support. We definitely would love to have your support for it and with it and work with us on it. And just help get information out there. Once again, if they need help, they can contact us. That we also work with different faith groups as well, which is how we went to the doctor. And you have a wide range of groups working together on this to see this is an issue. So we're glad to see that you're taking some interest in this and trying to figure out where you're going to stand on it. Hopefully you come to our side and agree with us. That'd be great. But if not, if you just hear people who need help, if you have contact us, we'll do what we can to help them out, whether it's directed to the right person or just who may just need their story for next session.
I'd be interested in if anyone thinks the city of San Marcos should look into this. Let me know later, please.
We so appreciate all the panel members, including Mr. Kilpatrick, taking their time to talk about this issue and giving their expertise on this. It's really been helpful, I think, to the league. We will be carrying on here and reaching a consensus at our local level. All the consensus meetings at the local levels will then go to the state. They will combine them, see if there is a consensus on consensus questions. It's a long process if you're not in the league. They take a lot of time in making sure that this is a position on the grassroots level. And then the state league will be taking their position on these issues. And whatever those positions are, then they'll take those positions and advocate for whatever support things changes or not. Sometimes there's no consensus reached. It just depends. We've had all kinds of things happen. People in the league are usually they study, but they don't always agree when it comes down to deciding whether there's a consensus on the issue or not. So we'll be doing that process. So join me in thanking these